weekend. Ira Epstein with your agriculture wrap-up for this week ending on Friday, November 15th, 2019. All right, as we look at the market, you can see behind me, and we're just after 3 p.m., the stock market has gone for all new time highs in a number of the indices. Good action there. We can see the grain markets, the corn is under pressure, the wheat's under pressure. You were fairly quiet in the beans, but they've been reversing the meal oil spreads in there. So that's one of the things you look at. Trade talk still going on, still nothing concrete. You got to wait and see what it is. Didn't hear anything yet about autos. I'm sure if you spent the day Friday near a TV, you probably saw some of the hearings today. And the stock market, and that's how I view it, this is where the money is thinking there's a problem or not a problem. New highs tells me that the stock market so far hasn't seen anything that they think will get through the Senate on an impeachment. Now, when we take a look at a monthly area chart of closes, and remember, on the weekend edition, I look at one monthly chart and then everything else is on the weekly chart because we want to get the bigger picture every now and then. So the monthly chart, well, you've stayed over the 18-month moving average of closes, and you have, very frankly, since you got over it right here, and that was back in September. Prior to that, you can see how the market had stayed down most of the year, and now the market has popped back over that average. Now, that average, keep in the back of your mind, it's a lagging indicator. What do I mean by that? It's looking at this break that happened here, and it's still responding to it because I'm using the 18-month moving average, and that's a year and a half if you think back. When we come to the weekly chart, you can see how the pattern has gotten to a recent high about 5 weeks ago, and the market has slipped back from roughly the 940s back into the $9 range. When we put the swing line study on it, this is the same chart without the swing line, but when you put the swing line on, you start seeing a pattern, and patterns are what I look for in helping me decide what is a trend. Otherwise, you can just say, well, you know, the market's gone up since May of last year. I guess it's in an uptrend. Well, when you take it in a shorter time frame, week at a time, the pattern is one of lower highs and lower lows. That means it's in a downtrend unless prices take out the 929 3/4 level, which was last week's high. See it right there? You've got the lower highs, lower lows. I then filter that. I don't think any one indicator by itself is typically the way to look at a market. There's one indicator that's my favorite for strength. I have another one that tells me trend. And when I'm looking at trend, I filter it with moving averages. And in this particular case, the bias of the market is determined by where the market settles in relation to the 18-week moving average of closes. Well, the bias is up. So what I've got is the trend down as the swing line is showing it with a pattern of lower highs, lower lows. The bias is up. The market had gotten back here in the September timeframe up to the upper black band. That's called a Bollinger Band. And only 5% of the time will the market trade outside of that band. It's an algorithm designed to do that. So the band reacts to price. And as you're looking at what's going on, resistance is up at 951, support's back at 891 1/4, the 18-week moving average. And the slow stochastic is what I use to tell me what is the momentum. And the momentum of the market, if we look at these two numbers, the red is turned under the blue, and it's gradually pointing and coming to the downside, matching what price action is doing. Often, you'll see momentum, the slow stochastic, will run in front of price. In the meal market, overall, the meal is stronger than most of the other markets. Why? Well, you've got a pattern of higher lows, you've had higher highs, the bias is up, and momentum is still pointing up. I look at momentum and I don't look to see on the weekly chart is it overbought or oversold. It's either neutral, bullish, or bearish. It's one of the three. It's still pointing up. Prices have held the 18-week average of closes. What would turn the trend down if it's up right now? Well, I would think getting under 298.50, this break low of last week to be specific, that low is 298.50, and closing at that price or lower could create the pattern of lower highs, lower lows. If the market stays in the uptrend, where might it go? Well, one of the goals could be the upper Bollinger Band in the 313 level. So I have the trend up, the bias up, momentum up, and what I don't want to see taken out is a bull. would be 298.50. Then I think you've got to be considering flipping positions. In the soy oil, what they've been doing this week is coming out of the position where the oil was the strong part of the market and the meal was the market in a minor correction. You can see what it was doing there. Well, when you look at this, you're seeing how the oil had fought a battle against the upper Bollinger Band and it had pushed it out. And we're in the first stage where the market's got a higher high, lower and low. Now, momentum has turned down on you. Support is the combination of the 100-week average at 29.45 and the 18-week average at 29.42. That doesn't mean the market has to go there because the overall bias is up. But if it breaks down hard, that's where I'd be looking for support. Where's the resistance? Back at 31.45. In the corn market, the longer-term trend has been down. You began with patterns of lower highs. You see them all there, and lower lows. Now, the market has returned back to this 100-week average of closes, and it's settled under it at the end of it. Now the question is, will momentum, which I deem as neutral, is it going to turn down here, and will the market come down a bit more? Hard to tell you that. What can I tell you that I think the pros are looking at? I think they are viewing this 100-week average at 375.5 as a stall area. I think the trend is what they're viewing as down. Resistance 382. You'd have to take out 402.5 to reverse the trend of this market, and from where you're at, that's 30 cents away. In the wheat market, we're in a corrective mode. The market had been, and I think you can see it right through here, higher lows, higher highs over the 18-week average and the 100-week average. You then had another up week. This is the week of November 8th. Now, when we come to this week, you can see how the market's pulling back. The low this week is 501.5. This low is 501. So the trend of the market has still got a pattern of higher lows. But, and there's a but here, you've also got lower highs. So you've stepped out of the uptrend. You've kept the upside bias. If the market takes out 521.5 without taking out 501, that could turn the trend back to the upside. Momentum is pointing down. So I think what momentum's telling you is this market wants to drop a bit more. If it gets through the 501 level, I'll be looking at how it handles the 493.25, which is the 18-week average, and the 491.75, the 100-week average. That combination is interesting. I'm also looking to see, does that 18-week start getting under the 100? If it does and prices get under both, that could be a bearish sign. In the cocoa market, what you've done is you've finally resolved some sideways action. You can see how long you were, remember this is a weekly chart, how long you were hanging here. Now if the market goes to the upside, I'm looking at this as resistance. If it breaks again, I'm looking at the 18-week average as support. The market breaks out to the upside. It appears to me that what's going on is the commercials have figured out these funds that they have to pay. I think it's $400 a ton in cocoa into a fund for Ghana and the Ivory Coast area. And the farmers there that are raising the cocoa, they have put together that if they're going to sell it to suppliers, in other words, people that need it, that amount of money separate from the price of the cocoa. Well, working that all out has been difficult, and I think they've done it, and I think the market has resolved it to the point where it's trying to break out to the upside. It is not uncommon when you come out of sideways action. Sometimes you don't get a trend in terms of the swing line. That's where you're at. We have to wait and see what happens. Typically speaking, the first time you challenge an upper Bollinger Band, the market backs away from it, so we'll see if it does that. In the sugar market, the trend is still higher lows, higher highs. In fact, not quite there, but pretty close. We've had the high from that one. This week's high was 12.91, but the market finished on a positive note. Support in between the 100-week average in green, 12.29. You don't want to see 12.05 taken out. That would break the upward pattern. Bias up, momentum up. Coffee market. Coffee stalled at the combination of the 100-week average in green and the upper Bollinger Band. It's a pretty stiff combination, but the trend hasn't changed. You still have the pattern of higher lows, higher highs. Momentum still to the upside, has not turned itself down. Still very much a bull market, but respecting a resistance point. If it were to break hard, 800 points or so, I'd be looking at the 9,900 level as potential support. In the cotton market, the market continues to keep with upside bias as it stays over the 18-week average, but it's not in a trend per se. It's got a higher high, lower low pattern. Momentum's still up. So market still looks interesting from the long side. Cattle market, a continued long-term bull market. Look at how this market has just galloped in price. It was down here in the low 90 area. It's currently trading near what, 120, 119.10? It's pretty strong. Is it ahead of itself? Might be. Why? You know, you got up to the Bollinger Band, and again, you closed over it. You only do it 5% of the time. And so the market's found a resistance point. Support on pullbacks, I would estimate the 100-day average is it. You don't want to see this number, 108.92, taken out. Barring that, this market's still very much in an uptrend. And in the hog market, big disappointment. We heard today that China has for 2020, next year, already committed to double the amount of pork purchase from the U.S. than it bought in 2019 to date. And yet the market for the week loses a penny. That's not pretty action. The trend is down. Notice where the market has been fighting. This is the combination of the 100-week, 18-week. Market got up there, and with the break this week under, you're in a new downtrend. Lower highs, lower lows. Momentum is flat. Bias is down. I think the pros are going to be looking at the 67.55 level, and if the market clears last week's high, I think that they'll say, okay, what we've got there is a market that doesn't want to keep going down. But this pause, if you will, where the market came up, ran into very stiff resistance. If you like what I do here, you're probably going to really like what I do in the morning. In the mornings, I try to cover 40 futures charts and 5 ETFs. I do it. I get up at about 5, well, I'm up early, I'm up 4:30, but I start recording a video somewhere between 5:30 and 6 a.m. The idea is to have it in your hands with ideas for you to help you with your confidence in the trading. It does not mean I'm going to be right. It doesn't mean I'm going to be wrong either. I'll balance that. But I'm going to tell you what I see, where I see it, and I'm going to try to cover it in a way that makes sense to you. So yes, it's going to be charts that look like the one behind me in black there. They're going to have more indicators than we have here. And I really take the time out to explain my points of entry, exit, what you should do, go in at the market, go in on a price order, which way to go, what's your stop. And I cover the markets in this exact sequence each time. A question people get is, well, you know, Ira, I want to get to the grains. Do I have to go through these? Absolutely not. If you go to our website at the bottom, you'll see a scroll bar. Just put your mouse on it, scroll. It's going to light up foreign currencies, metals, meats. Let go. Wherever you go, it's going to play. That too difficult? We'll have all the list of the futures on the side of your screen here. Just click which area you want. You've got it. Typical video, about 20-25 minutes in the morning. But the idea is I'm covering the fundamentals. I'm starting with what I've seen in Asia, what I've seen in Europe, and what I see in the current chart action with very specific ideas. So if you'd like to see what this is about, it's 26.5 cents a day, $7.95 for the first 30 days. After that, you can either go on a one-year subscription, $156, or go $15 every 30 days. Your call on what you want to do. To find out more, to sign up, go to our website under the word research. You'll see the different research I have. This video does not include my written commentaries. And those commentaries, if you're looking for somebody to give you an idea, what are the reports of the day, where are they, in a way you can read it all in about 2 minutes, bingo. I think you'll find that I'm right there for you on that. You can also click here if you're watching me on YouTube. It'll take you right where you have to be. I'm Ira Epstein. You have yourselves a great day, great weekend, and I'll see you all Monday.